Hey guys, Eddie here from Dilleen Property. Today I want to talk about a very, very important subject, and this subject today that we're talking about is what a property is worth, or looking at the value of a property. Basically, from my opinions, my experience, my I guess experience with building my own property portfolio and what I've learned, I'm going to be sharing with you today things that I really found very, very helpful when growing my property portfolio, how my mindset changed along the way. And one of the things is basically comes down to looking at property values and properties in particular. And basically one of the things that I've learned about it, if we jump right into it, is that there's always a range to what a property is worth. And that's one of the biggest things that I had a very, very hard time understanding from a very young age. I basically, when I was 17, 18, 19 years old, I would look at realestate.com, domain, go out to different properties that were out there for sale, go to open inspections, and you'd see a property as an example listed for 300,000, 400,000, whatever it is. And basically you think that that's the price range that it's at, or that's roughly how much it's worth. One of the things that I've learned basically is that there's always a range to what a property would sell for. And there's always a range to what a property is worth. This one property does not have one exact value. So if I were to jump in there and explain it a little bit more and go a little bit more in depth, one of the things that I learned years and years ago was actually basically how properties get listed online for sale. And I actually did a little bit of real estate sales when I was younger, so I actually got to see the back end side about how real estate agents list properties online for sale and actually sell properties sometimes off the market and all that kind of stuff. But basically what I found was that real estate agents in general, they'll use things like RP data, different subscription-based, I guess, platforms that look at different comparable sales around what a property is worth and where that property is in the market. And what usually happens when someone actually needs to sell their property, so say someone needs to sell their property and it's roughly worth around 400,000. What usually happens is that that person will first contact a local real estate agent within their area. So they'll go to El Hooker, Ray White, Rain Horn, whatever it is. They'll go to one of those places or a couple and speak with a couple agents. Whoever they end up signing up with will basically ask them a few questions, and they'll basically gauge from the get-go how soon do they need to sell. So it all comes down to circumstances and timing is what I've learned. Basically, it's a very well-known thing that time is money. So depending on how quick that person needs to sell the property depends on a lot of different things. But basically, if that person says to the agent they've got 6 months to sell their property, there's no time that they're testing the market, they're trying to get premium dollar for that property. That agent could list that property within a range. So if it's roughly 400,000, they might put it at offers over 400,000, offers over 420, or offers over 440. It's up to their basically discretion and what they communicate with the actual owner and what the owner agrees with based on the agent's influence and market data and all that kind of stuff. However, on the other side of the equation, if a person needs to sell within, instead of 6 months, they have 6 weeks to sell the property. There could be a million different circumstances, such as someone might be moving overseas. There might be an urgent circumstance in the family, good or bad. There might be, they might just need access to cash for something else. Maybe they're getting married, maybe they're going on holiday, or whatever it is. There's thousands of different circumstances. Maybe even they have buying another property and they've already signed a contract, they need to sell their property to buy the other property with that certain time period. But basically there's thousands of different things. Maybe it's a bank repo. There's thousands of different reasons why properties sell for less than what they're actually worth. That's one of the things I've learned. So if I can share that, I guess, with a few people and it changes their mindset a little bit and it helps them as well, then that's good. But basically, if they do need to sell within that 5-6 week period, the agent will list that property or recommend that they have, with the owner, that they have a different marketing strategy or a different price point. So compared to when they had 6 months and they listed it for offers over 420,000, that agent could say, look, let's put it at offers over 389 and negotiate from there. And it also depends on the type of agent, if the agent's from actual in the area. Sometimes people list with agents that aren't actually within the local area. It's someone, a friend or a family person they know. So the agent might not know the actual market research as well as some other agents and what the actual real value is worth. So there's always a range, and basically, long story short, depending on the agent, lots of other influential factors and how quick they need to sell, the property can be placed at any point within, it could be a 20% difference on either side. So when you look at properties on real estate, on domain, just because they're listed at a certain price doesn't mean they're worth more, doesn't mean they're worth less. It really comes down to doing your own individual research and looking at comparable sales. One more thing that I guess that can actually prove the fact that is evidence to back up what I'm saying is basically if anyone's ever bought a property and actually got a bank valuation, they're always, depending on which bank you go to, say you've got one property for 400,000, if you take it to 5 different banks, 90% of the time, they come back with 5 different valuations for the same property. So if you go to, for example, St. George, Commonwealth, Westpac, ANZ, or you go to like Liberty or Pepper Home Loans or whatever it is. So you go to basically to 5 different banks, get a bank valuation on the same property. From my experience, it's very, very likely that you're going to at least get 4 different valuations out of that 5. Maybe even 5 different valuations, and it could vary by 5, 10, 15, possibly 20%. So that's a massive thing. So I guess that proves the point and backs up, I guess, is evidence there that basically there's always a range to what a property's worth. And that's one of the biggest mindsets change that I've had over the years, is that it all comes down to timing. If I've seen properties sell for over what they're worth, 50,000 over, 100,000, whatever. I've seen properties that are absolute bargains that they get snapped up right away. I've seen properties get listed online for sale on real estate, domain, other websites and that kind of stuff that properties get listed at. And say for example, it's listed at 300,000. I know for a fact it's worth more than that, but it gets listed at 300,000 and then someone picks it up for 290 or something like that. But I know there's comparable sales out there for 330, 340, 335, maybe more. So you've always got to, I guess, do your own research and don't just think that there's one value to a property. It's always depending on how quick the owner needs to sell, what are the circumstances, and who's selling it, all the rest of it. There's also basically, from my opinion, 50 to 60% of the properties don't ever make real estate or domain online. A lot of properties get sold off the market. Probably half to 60% of the properties that I pick up for clients and myself are actually off-market properties. They are through, I guess, people that have bought property through before, agents that they've got connections with, that basically they'll sell those before they hit the market. Benefits of why people do not sell on the market is, for one, they don't have to list it online for sale, so it costs money for the seller to basically put it on real estate, domain, and all those kind of different websites and actually list it online. There's also marketing and all that kind of stuff they have to actually do for the actual property. Professional photos cost thousands of dollars and all that kind of stuff. So actually the owner saves money also sometimes as well. So it can actually work out a win-win situation to get an off-market sale. So I hope this video has helped, and I really hope you think about it when you actually go to purchase your next property. There's always a range to what a property sells for. There's always, you can always buy something on the lower side of that range. You can buy something on the higher side of that range. But as it is, I always want to buy stuff that is below comparable sales. If I can actually see and, touch and feel that next door sold for 15%, 10%, 20% higher than what I'm buying this property for, then, that is an amazing deal. And mix that with good, strong cash flow as well. So thanks so much for watching, guys. I appreciate you, watching the videos. If you found it helpful, please like, share, and all that kind of stuff. Thanks for watching, guys. Bye.